NYDIG has laid off 33% of its staff as of September 22nd, according to a new report from the Wall Street Journal that came out yesterday. This is big news because NYDIG has a very important place within a lot of different parts of the cryptocurrency ecosystem. They're well known for their large raises, trying to bring Bitcoin to the masses via banks. Not sure if that really panned out. According to some quotes within this report, there's a lot of confusion over what NYDIG was trying to do. There wasn't a lot of implementation, and now they've laid off about 110 staff. Interesting things about this report is that there's not really a lot of clear information from the executives about like how this layoff occurred or why it occurred and when it occurred. It just sort of was trickled out there, and that's why we have a report and not necessarily like a blog post from NYDIG itself. Zach, I want to throw this one over to you. NYDIG has been a big player during the bull market 2021. And to see this layoff, like, it's not surprising. We're going to a bear market, but it is surprising because NYDIG has a lot of money. I think they raised like $1.4 billion in total.
Yep, and now they're cutting back. 100 folks out the door. Some good reporting from Tracy Wong, Danny Nelson, and a couple others on the CoinDesk side to advance this story, quoting some unnamed former employees saying, quote, "They blew through all their money telling a story that they would bring Bitcoin to the masses. Their core strategy was blundered." And there you have it. They're cutting jobs as proof, potentially, of that being a bit of a blunder. We also saw a leadership shakeup here not long ago that was announced. This is all, again, through sourcing. So clearly something was not great over there when we last talked about the CEO and president being shuffled to different parts of the parent company. So yeah, down bad along with the price of Bitcoin. And as a result, people are out of work. Tossing it over to Jen for her thoughts.
Yeah, Zach, that quote you read at the beginning of your take, I want to just counter it with a story we spoke about 2 weeks. So when we talked about the CEO and president being reshuffled, the exec chairman was reported as saying the firm's balance sheet is the strongest it's ever been, and we're now investing aggressively in a capital-starved market. It's not a good look to say that and then 2 weeks have 100 people laid off. It's just every single time we talk about these layoffs, it's not a good look. It's a PR nightmare. It is definitely possible that they do have a bunch of money on their balance sheet. They want to invest it into different areas of the market and they don't need as much staff, but this just looks so bad and again, looks so out of touch. Adam, what do you think?
So I'm going to take a slightly different approach here. Again, I think that in a bear market, it gives you a pretense to do a thing that maybe you didn't, maybe you wanted to do kind of all along, but didn't really kind of have the ability to do it because there wasn't kind of a catalyst for it. This provides a catalyst for it. And David Z. Morris had a piece a couple of days ago talking about Archegos and Credit Suisse, I believe, also. And in it, he had a really kind of interesting insight, which was talking about how, as a bank, it's much better to be viewed as mercenary and evil than it is as incompetent, right? And so I think that the same thing might apply here, is that, again, for these financial companies, like, it's okay if it looks like you're out of touch and like not doing the right thing for your employees, because that's not really the market that you're serving. You're serving the market that aggressively wants you to make money for it. And in that way, it might actually be better to take moves like this and take advantage of kind of the market low with the cash that you're not spending on these people versus continue to give everybody that roll moving forward. Will?
Yeah, no, I definitely agree with you. I think that a lot of times during these bear markets, we have an opportunity, or companies have an opportunity to cut staff they did not want to be there in the first place, or found out that they didn't want them. During a bull market, the opposite is true, right? We have this aggressive hiring that it sort of bends practices and you pick up people that you shouldn't. And then during bear market, you shed them pretty fast. And I think it's also notable to say, like, this isn't just a crypto thing. This is a tech thing. This happens in technology all the time, and it will continue to happen because technology moves so quickly and there's so much capital involved. People have to move very fast and make interesting decisions. That being said, I do want to like hone in on some of the quotes that Zach brought up. That NYDIG strategy, there's some insider leaks from the information here that they didn't necessarily have a plan, right? They were banking on banks being able to implement Bitcoin right into their accounts. That seemingly hasn't happened. And I think if you look at banks, it makes sense, right? It takes banks forever to do anything, to add any sort of new feature. They're very slow, and they're slow on purpose. And adding something like Bitcoin into their backend, that's going to take a while. I mean, I remember from about a year ago, there was a huge announcement about NYDIG working with a ton of different commercial banks all around the United States to implement Bitcoin into their backends. I haven't seen really any updates about that. And I'm wondering why at this point. Not saying that it hasn't happened, but I'd like to see more reporting around the products that NYDIG has rolled out. Zach, back up to you.
Yeah, we say like the price doesn't matter, but the price as a barometer of retail interest certainly matters, right? And these announcements came out when the price, therefore the retail interest, was high. Now the price is low, the retail interest is low, the desire to provide these services to a less than interested audience, that may have gone away. And as such, the plan is sort of like, in dire straits. And as such, they're cutting staff because that's what they have to do. So anyway, that's just the thought that came to mind as you were putting that together, because I think it is a good point to point out. But Adam, I'm going to toss to you for last thoughts on this one before we change gears.
Actually, I'm going to kick it right on to Jen, who I saw had some final thoughts on this one.
Well, I was just going to respond to Zach, what you're saying. I think during a bull market, a lot of crypto companies underestimate what it's going to take to actually bring crypto to the masses. And it's only when we hit the bear market and all of the excitement goes away that kind of comes to fruition. And Adam, to your point, yes, I think that companies are allowed to lay people off. But I think that there is a way to do it where you don't have your employees going and speaking to the media, not wanting to be named and revealing what was going on behind the scenes because they don't think that you're running the business properly. I think there's a balance, and when things like this happens, it points to maybe a bigger culture problem that has been brewing and could end up being a PR nightmare, which then could affect your investors in the long run. And so I think the two kind of just go hand in hand.